Hey, good day everyone. It's Simon, thetraderinstitute.com. I did this webinar um, yesterday live with the audience, part of um, part of a group of traders, but it was not recorded unfortunately. So I'm redoing this today. Probably less enthusiasm as it's not. I don't have audience, but probably more informative because of what happened in the market today. What happened in the market today reflects exactly to the tick what my subject is all about. We are achieving 1,000 ticks or more, pips or ticks a month through my trade calls, which are delivered either live in a live trade room or also typed in Telegram in a Telegram channel. And if you look at our Telegram channel, we have the indices, we have metals, we have oil, currencies, etc. Okay. Also, not to mention that besides these channels, I have multiple text private messages from students, members, etc., asking me questions. So you might see them coming in, but you will not see them in the general chart uh, chat. You will see them. I will see them only, and I'll respond to them privately. So that being said, today's webinar we'll talk about your psychology versus my accurate trade calls. This subject, I think, it's one of the most important subjects that you, as a trader who's been trading for a very long time, yet suffering or struggling from achieving positive results on a consistent basis for many reasons. One of the reasons, and you see this image, so you can remember it, is that I wish I have taken this trade. Why did I panic and exit too early? I don't like trading currencies. My margin doesn't allow me for swing to hold swing trades, etc. Other reasons maybe, do you trade what you feel? Again, what I'm telling you now, it happened exactly today, just a few hours ago during the morning session while I was holding the morning session. Okay? Do you trade what you feel? Do you know your feelings are programmed about the market? They pre-program you, whomever is supplying the news, because these news outlets are controlled or owned by specific people who actually control trading. We call them the market makers. Fed news, politics, elections, war news. I would get always questions. How can you call an oil long with inventory news coming out so high when demand is low? How would you do that? First of all, you have to be able to read the news correctly. News is what's expected now, what had come out, and the previous news was it adjusted or not. How do you short the market after such good employment news? I always say one thing: I trade what I see, not what I feel. Okay. Other excuses: the stop is big and I can't afford 50 tick stop. Well, there's a solution for that. We can talk about it. I'm here working with my members. We always chat, we always talk, we always share ideas, and we have a blog here for elite members. Look at that, 126 of my elite members are in it, so they will help you as well. Okay, I can't hold trades overnight. Remember, you can always switch to CFDs or do forex spot. You can always do mini or micro contracts. You can always do options. There's many ways to benefit from these amazing trade calls. Oh, I can't let a trade retrace against me. Well, how can you catch a big move if you cannot let it retrace? If you don't give it enough space? I don't trade the yen, for example, because I called the yen long a while back and it's still giving us profits. It's slow, but it's going nicely. I only like the ES. I don't trade forex. I don't trade against the daily trend. I am down today. Let me see if I can make it. And all these examples coincidentally happened today. Let's move. First of all, how do I trade, and how many contracts, and how I manage my trades? Let's examine that. Let's examine this today's trading. Okay, and first of all, I call trades for three contracts or multiples of threes, up to you. When I say entry, for example, long here, stop loss here, I'm specific. Everything is specific. I'm going to give you a number, and I'm going to give you a stop loss and first target and last target. When I say we expecting a long or there's support here, it doesn't mean that I'm calling it long. And you will know once you join us as a trial member, you will know. You'll get used to it. First of all, I will call it, for example, long, and this is what I did on the Nasdaq today. And we'll take it as an example. Although I had more than one trade call, all of them good, but Nasdaq, it will be an example because something happened where it matches the title of the webinar today, which is your psychology, your preconceived idea about the trend or the market, preventing you from benefiting from my trade calls. So I'm anticipating the market to go up from here. Anticipation, I'm anticipating. So I'm using my volume profile, I'm using my pressure system to find out. And I'm using things that market makers are giving me, something that I developed over the years. So the Nasdaq comes down here. I call it long. This is the stop loss, right? I would say take, if you got in, your first target T1 is, for example, here. So you get your first target here. The first target out of three contracts, we do three. T1 is on two of them. So if you made 100 ticks or 80 ticks, for example, T1, 80 ticks, that is on one, right? So on two, that is 160 ticks, for example. All right, and that's how the Nasdaq works usually. Nasdaq is a beast, especially the way I'm calling these trades. I'm trying to catch bigger trades, swings, right? And the stop loss is here, and I will tell you, stop loss, although it's here, I don't have another smart stop, another smart area. And I will tell you the target. So now you have one runner, and your runner, even if it stopped out, you made 160 ticks. Your runner is, for example, 100 ticks in risk or 70 ticks in risk. You're still making money. But most likely it will go according to what I'm expecting. Okay? So that is how I call trades, and that's how we manage these trades. Now, the main idea behind my trading is three things. Anticipation. We anticipate the market, whether it's going up or down, right? Anticipate, and then confirmation. Anticipate, confirm, and then execute. My main thing that I'm trying to push, I'm trying to teach my members is confirmation. Once you have that established and know how to confirm trades after you anticipate the move, all right, you are doing a fabulous job. You are doing out of 10 of your trade calls that you're taking or you're making, you probably will go down to 3 or 4, because you've been trading so far on this part. Anticipate. You're anticipating the market to go up, and you're anticipating it to go up from this level. For example, this is 50% Fibonacci level, but it will break it, for example, and you will lose that trade. You don't know how to confirm. Confirmation is key. Confirmation stems from the volume inside the market. Okay, so when you incorporate confirmation, automatically, out of for example, you have 1, 2, 3, 4, 5, 6, 7, 8, 9. You have 9 opportunities throughout your different instruments. For example, I have the ES, the YM, the RTY, the silver, the gold. I also look at the spot side of these. For example, silver, I have the silver in Forex, I have the RTY, and I also have it in the CFDs, which is the spot equivalent. Swiss franc, yen, etc. So once you have 9 opportunities, but you now applied the method of looking at it from the perspective of the volume and the market makers, automatically, folks, you will eliminate this, 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 and probably this and this. You will keep these three traits, looking at these three traits. This is probably 80%. And you would know once you accomplish my program, you would know which one is 80%. Let's say this is 70%, still good. This is also another 80% at least. And these were maybe 60%, 50%. Some of them were even less. But they were all based on anticipation, anticipation, anticipation. Anticipation is the part where the market makers will give you ahead of time, whether it's through news, whether it's through the market movement, technical analysis, etc. Great example. I'll give you a great example. First of all, let's see today's market. You look at the time. This is 10:15 a.m. Okay, in the morning the Nasdaq came back very fast, low, came back fast and furious, down. First thing in the morning. If you look at the, if you look at my analysis, and today is the 15th, right? Look at the 15th. Everything is time stamped. Everything is given to members live, etc. The move down, obviously, it was anticipated since yesterday. And if you look at the Nasdaq, this is the Nasdaq. This is yesterday, the 14th. I said I have a retracement starting on the Nasdaq, or reversal starting, or rejection on the Nasdaq at 13020 area on the Nasdaq. YM, look on the YM on the. I said the Nasdaq. I don't have an exact level, but it's retracing back to this level 3600, which is obvious. This is what my indicators are giving me. These are indicators stemming from the volume. It's nothing out of my pocket, folks. It's everything is what the market makers are giving me. And let's just stop for a second. Look at the YM. Look where it came. This is a 120-minute chart. Look what happened from since yesterday. Look at the Nasdaq. 120-minute chart. I was expecting 1320 right here. You see this? You see this magenta line? You see this was the level I was anticipating since yesterday to break it down. So again, that was anticipated. What do I mean by anticipated? I'm expecting this move to happen from here all the way down to here. I'm anticipating this to happen, but if I don't have a confirmation, if I don't have a stop loss, I cannot risk calling a trade. So if you trade only on this, probably you would have been lucky with this trade, but if you continue doing this, luck will not help you. Okay, so now let's jump over to today. So the anticipation was there. So this was the 14th, as you see. And now we are on the 15th. 15th. Indices or indexes, mixed signals, mostly bearish. Okay? Mostly bearish though. With no specific area support and resistance at this time, it shall clear up. And this is at 9:27 a.m. before the market opened. So expecting it to come down, but no clarity. All right? Let's see. Look at the time at the bottom. Maybe you don't see it. A little bit lower. Maybe here. 9:35, 9:30, 9:29. See? This was when I said exactly here. I said it's going to come back down. And it really came back down. Now, did I call it? Did I call a trade? No. But I called a down move. But did I call a trade? No. Right? So, my idea, and I gave specific numbers to my members. I said 12750 area is going to bring it back up. It came so fast, everybody was, was terrified to actually think about it. But let's see what happened. 9:36 a.m. I said I have a reversal on Nasdaq, or rejection or resistance at this number 12940 to 45 area on Nasdaq. Okay, if I show you at 936, this is the level that I was looking to 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 bounce, or to this area to take the short from. Again, talking about anticipate, confirm, execute. It did not touch my damn line. So there was no confirmation for me to, if it touches my line, I will hear an audio in my ear, and I will go look for confirmations, and I will see my sellers or buyers coming in to make a decision, and exact stop loss has to be confirmed. So it did not touch it. So that short was determined ahead of time if it had touched the line. It didn't touch it. My line was not touched. So I did not call the trade. Am I confused? Am I feeling bad? No, it happens every day, folks. I am not here to entertain my members to call trades just randomly, just to look good, because they will bite me in the butt. These, if you don't confirm these trades, especially on something like the Nasdaq that moves fast and big, you know, how much longer you can stay in the business if you keep trading especially the Nasdaq this way. You have to confirm. All right. So now let's move on. At one point, I said I'm waiting for 1030 move. It might give the market a push higher. I see indices coming to support now. So this was given at 1014. So if you look at 1014 right here, 1012, 10, 10, 12, 10, 14. So coming to a support. But they touched the support before 10:30 a.m. And the support was not touched completely, but because the number I gave my students, I said my next support is 60. See the 60 here? You see the bottom at 60? It touched it, but it was before 10:30, 10:15, 10, 10, 10:20. So I did not even pay attention to it. It's gone. So we kept saying, no, we missed it. I gave a signal on the long on the silver and gold, and they both are doing okay, but they're not the subject because they're moving normally. Okay. So the market came down, went back up. Everybody's happy. Everybody made money because a lot of them cut the trade, right? Even without me calling it exactly, because if I call it, as I said, it has to be exact entry, exact target, exact stop, right? YM came down, etc. So, and also I called an ES support. I said I have an ES support here, but I'm not touching it before 10:30. And sure enough, it came back a bit lower, and then the ES started going back up. Now, that's gone. We talked about it here in the chat with members. Some of them said this much. This is how much they making, etc. All right. So that's done. Now, what do I do? I'm missing the trade. It's going a few hundred ticks in my favor. I'm missing it. What do I do? Nothing. I would rather miss a trade, not call a trade, than trying to look good and call a trade, chase it, and calling it to my members where they might chase it with me, and then they will just lose. First of all, if I had called the trade anywhere in this area, my stop loss it's at 40 anyway because it's determined already. Sorry, that was my audio indicator. So my stop loss is at 40. So if I call a trade here, imagine if the stop loss was hit, big loss. Let's move on. 1023, possible long on Nasdaq coming up. I put a line right here, right? ES possible long. I'm trying to catch the Nasdaq 12. Again, I told you, I have to confirm the trade. If I say I'm trying to catch a trade, if I see support, it doesn't mean that I'm calling it. I'm just giving my members a heads up. All right. This is my goal. Whatever 20. So that's not part of it. It's okay. Just giving them ideas about how long should we wait before we see something different. So now at 10:58, this is almost 30 minutes after the first move that happened here. 10:58. NQ possible long. NQ stops at 12784 if I call it long. Look at this, if I call it long. So it means the market came back down to this level. You see this level here? and I wanted to call it long, and it did go long a little bit, but I didn't see confirmation because there was no confirmation. So I said if I call it long, I could not call it long. It's gone. I didn't because I didn't see anything. And I said NQ next strong support is 12750. What does make me say strong support? What does it make me call the strong support? Let's examine that here. Strong support. When I am having a trade, okay, for example, if you're trying to catch a long, and let's stick with the same example. You're trying to catch a long, the market going up, coming down, going up, trying to catch a long. Some of you will say, okay, I will have a trade at 38% retracement Fibonacci. Some of you, and we're sticking with Fibonacci, folks, for a reason, because most of us know what it is. Most of us use it. I don't use it, but most of us use it. 50%, and some of you say no, 68% is the best. So that's your typical move. So basically, the market goes up, comes back down here. You think it's good, you take the trade, and all of a sudden the market comes back down here. Your stop loss is hit 30 ticks, whatever, which is most likely randomly because you don't use specific indicators for your stop loss. So the market comes back down, comes to 50%. You take it again, you think it's going to go again in your favor. It comes back, stops you out, and goes back up from here. And you say, no, 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 it's going up, it's going up. Let me catch it. You catch it here long and comes back down again. And you take it here again, whatever, it stops you out. So at one point you say, you know what, I'm done. I lost so much, I'm done. Let me take a trade randomly. Maybe I'll make it back up. Wrong. You and I both know that's wrong. So that being said, let me show you how I would look at this market and how I would say whether it's strong or not. In the volume profile that you saw, let's emphasize on that. This is your volume profile, and you see on Sierra charts how we use it. It's something specific to us, and you see how you can sharpen the edges, smoothen the edges, etc. Right? And you can use it on different charts, different time frames, different ways to use it. So and you see how it's only reading the volume that you want to trade. That's very specific to us. So let's go back. So with that volume profile, I can tell you we have different levels. Some of them are continuation, for example, continuation zones. This is a continuation zone followed by another continuation zone that looks differently, but there is in the middle something called rejection, a rejection area that's usually in between two continuation zones, right? So we call it rejection R, and this is continuation. No, now, is there any reason for me to basically call a long from here? Look where it is. It's in the middle of a continuation. Furthermore, if you look up here on the Nasdaq, when I said I have a resistance here and I wanted to go short, this was my idea behind it. It did not get there, so I missed that short on the Nasdaq, which I explained earlier. Now, does it make sense for me to catch it long from here? No, look where we are. We are in the middle of a continuation zone, and nobody will give you that long. I mean, you might be very lucky. Same thing here. Continues down. And here you decided to take it long because you thought, you know what, maybe double bottom. Oh, no. You're doing things randomly. So let it move. It got into here. This is when I called it long, right from here. And, fair enough, maybe you wait for it to retrace, which I do. I wait for this area. Now, this area comes in play, and the market stops here, for example, for a few seconds, whatever. Now, what do I want to see? I want to see my other indicator, which shows me the entries of the market makers. I have an indicator called SAL. SAL will show me the heavy volume that is acquired here while the market is dynamic, while the market is moving now. So I want to see my SAL indicators hitting, showing up right in here. The market will start probably retracing a little bit, and when I see that's happening, the sell indicator will give me, and the volume profile will give me an area of a stop loss. So basically, my stop loss has to be somewhere very close to the entry. So if it retraces back up a little bit, I'm sorry. If it retraces back up a little bit here, why is it keep giving me the red color? Okay, still doesn't matter. Uh, I know my stop loss is going to be somewhere here. Okay, trying to get it in a different color, but it's not working. That's fine. That's fine. So anyway, it's tried retracing here. Now I know my stop loss has to be somewhere here. Why? Because once we get into this zone, which is basically a continuation zone, as you see, I'll be in trouble because it's going to finish it. This could be 200, 300 ticks. So basically, this is my stop loss, and it's confirmed not only by the volume profile, it's also by the sell indicator that gave me enough volume here to make you visually see that it's going to be hard to break it. So now I called it long, and we got first target. I told them if you got around this price, you can get this price, 20 points. First target 20 points. That's 80 ticks on each contract, 160 ticks because we do 2 out on T1. So if you get 80, that is 160 ticks. So the reason behind me being very careful and doing the job, so you don't you at one point you will believe in the volume profile. So the Nasdaq coming down at specific time, specific entry. I missed it. I did not call it because I was expecting for some more confirmation maybe, or the time of the day was not. I was waiting for a couple of more minutes. It goes up and comes to my strongest support right here. My stop loss was 40, 160 ticks, and that's all established here. If you go through this, you read everything. I said if you got the Nasdaq at any price within 50s, which is 12750 area, 55, 57, 56, 52, you get out at 70s, which means 20 points. Okay, and then last target remains the same at 1940. Okay, 1940, which is 940 I meant, which was basically a typo, but 40 which was missed already, which is about here. 940 I meant. But the students understand why. Even if I make a typo, they have the visual. They have the visual. They have the everything. So they see it. So point being, folks, when the market goes up and then comes back down so fast, it came down so fast, folks. Everybody was intimidated. Everybody was thinking, no, it's going to crash. It's going to come back lower. This is also something I teach you, the art of trading against traps. And I told my members, here, you see at 11:09, after a few minutes after we got their first target and we were comfortable, etc., I said, Nasdaq is crazy. You have to give it room and trade it safely with a lower amount of contracts. I'm talking to students who don't have larger accounts. I missed the NQ once, not this time. Of course, we joke. You see pictures, etc. We joke about it and stuff like that. So, and then I said, if you notice, the Nasdaq came all the way down very fast after that 10:30 tremendous move up. You notice that it gave everyone who is not looking at volume a feeling that it's going to be a complete breakdown, which means complete breakdown here. After it went below this low, right? This is what we call trap, and we have a complete video explaining traps in the members area, and I also give them a visual, right? And at that time I was at almost 300 ticks in the profit. And again, we have people saying, you know what, agreeing with me, like playing poker. He says, if you don't know, if you can't spot the sucker, which is funny, on the table, players know this. I don't play poker, but it says you could be the sucker. And again, it's fun. People talk about things and joke around, but this is and also share good ideas here. This is elite members chat. So let's go back and talk about this. We have a video explaining traps for the members area. Now, your psychology prevented you from taking this automatically because you're thinking it's going to be a complete breakdown. But if you are a member and if you click on this, right? No, not on this, in the members area, which is right here. This is your members area as a student, right? If you look at section 4, okay, and if you look at traps and trading knives, a complete video on how to deal with these kind of trades, a breakout or a breakdown that you think is going to go completely the other way, but it stops and it turns while you're taking the wrong direction. Okay, there's a reason for it. The market makers need to do this for them to get filled with all the amount they can while you are taking the wrong direction. Okay, and this was a long time ago. Done for my members, traps and knife trades, which I explained to my members then, and you see it was during the live session at that time. So sticking with this window, we have a comprehensive educational members area, starting with indicators, how to install them, how to use them. As level 1, of course, you have the monthly live trade, because we have also a live trade room as well. Then starting points, advanced profile level, for example, there's an advanced profile level. The ACE method, anticipate, confirm, execute, and other things that are comprehensive and a must. But if you are not a member yet, sorry about this, the internet is a bit slow today. So this is also on FX and Forex, etc. But if you are not a member yet, you need to go to the website, and it's very easy because we have some free education. TheTraderInstitute.com is the website, okay? And I will explain how to get in with us as a free trial. But get started. Check out our YouTube channel. We have a lot of videos, etc. on the website. This is a good webinar. For some reason, folks, I'm sorry, but you can see it on the website. You will see it once. If for some reason, I think they're doing some maintenance on the internet in this area. We just started now, so I'm a bit slow on the internet. Regardless, check it out. This is the YouTube channel. A lot of videos. I will show you how easy it is to maintain a profitable trade if you use the logic of volume profile. Okay, so going back to the education that you can get for free right now is this website, and you can catch it from, if you go to the website, go to resources, you can go to education. It's right there. So you can get a number of videos that I highly recommend. One of them is, this is not by me, this is done by Dr. Kenneth Reed back in 2014. So I'm talking about 6 years ago. If you have not seen this video, okay, it's a must. Adult ADD and how it manifests itself in traders. And I joke about this, but I really mean it. Unless you're getting married today, you need to view this video if you're a trader. Okay, and then we have different videos that you might enjoy, another presentation, but you have this presentation, you don't need this one, but you can also watch it. I have other videos such as the secrets of swing trade calls, secret of volume profile, a SAL indicator, what it means and how it works, the magical volume profile, and our method, and other videos. Okay, so please pay attention to those, and probably there is a PDF file that I might be sharing with everybody to give you shortcuts to all these links. So now you know how I trade, how many contracts, and the reason why you should learn how to be more stable and defeat your fear and psychology when it comes to trading. And there are different ways, different methods of doing that. Some of it is to maybe trade with a smaller account to start with. Some of it is to maybe mix it. Some of it is to maybe not to trade randomly, not to be emotional about things. Follow the trades, follow the logic that I am following. There are things that you cannot control, and I have students in different parts of the world. For some example, I'll give you. I have a member who lives in many members, but one of them is specifically who told me that some of the trades he can't catch because it's late at night. He lives in a different time zone. He lives in a zone that is opposite to ours. I live in the Eastern time, Eastern Standard Zone. So when I trade, it's in the morning for me or in the afternoon. For him, it's evening, late evening, and after midnight. That you can't control. It's fine, but there are things that you can control. Okay. Here are some examples of some trades that I saw ahead of time that I could not call. For example, I noticed the Nasdaq is going up a while back, a couple of days ago, from here to here. I did not call the trade. Look what happened. This was, 700, 800 ticks move. We talk about it, and this is a chat. We talk about this all the time, right? Some people took it because they saw their own confirmation. If you are a trader that has a specific method that is not being successful, maybe, or maybe it's 50-50. Once you apply volume profile to it, you will see it probably working differently, right? So you have to be aware of that too. Now, other trades that I called, for example, and I see, look at this. Gold, expecting it to come back down from the 50 area all the way down to 1860, something like that. This is what I said. But I said I don't have stops to call the short. Folks, gold came back down over 1,000 ticks to reach the level. And right now we are long on the gold because, and that I call that. Look at the gold. This was the call, 1950 level. But I did not call. I said I can see it coming down. It went to 60. So if I had called it without knowing my stop loss or gave my students a random stop, this was 100 ticks against us. So we would have been stopped out, right? Look where it came to. And this was my goal on the goal. And again, anticipate, confirm is the key. Confirmation is key. All right. And so we have other examples too. I started with this, folks, long time ago. I started doing the tape. I've been doing this since 2001, but in 2005, I was able to break the numbers on the tape, on the bid and ask ladder. I don't use it anymore because now it's simplified very, very much. I don't use it anymore. So we have different indicators and much simpler, right? These are some pictures from the past. You see, this is Colorado, Denver. The previous one was, I think, Toronto, Ontario. This is Las Vegas. So anticipate, confirm, execute, and I already explained what that means. You will also see testimonials on the website. And these same people, folks, that gave me testimonials, you will see them. You will see them once you join us, whether on a trial session or once you become a member. But to become a trial member, first of all, on the website, if you go to the website, it will show you how to join Get Started. So if you click on Get Started, you will get an automatic link coming to Telegram. You have to download Telegram. Once you download it, you will get access to Welcome to TTI. I have 3,600 members on this. Not all of them are probably advanced traders or I'm suitable for them. Maybe some of them are trading small bitcoins. Some of them are trading currency. Some of them are trading micro accounts. They cannot maybe be members, but this is what it is. You will become, you will have an access to this channel. Welcome to TTI. Once you get here, you will see some posts maybe every day, every other day. what's going on, some examples, some videos maybe. But for you to join us, to join all these channels and also the live trade room that I have twice a week now, you need to ask for a full membership, and you'll see. Um, you will see, for example, if you're looking for, I will tell you, if contact Daryl for comprehensive trial today. So you will get this, and if you don't get this, just private message me or private message Daryl, um, private message any of the team members and ask for your full trials. Now, let's talk about the final target and why I was able to milk 450 ticks runner. Remember, 450 ticks runner, it was on the last contract. We already made 160 ticks. So, folks, that is over 600 ticks already on this one trade. So, when I say we can get 1,000 ticks or more per month, I'm not joking about this or not making things up. Exiting now at 450 ticks. Now, remember, my goal was to get to this level. So I exited here. So we could have gotten probably another 300-400 ticks out of this. But I said I'm exiting now. Now, is that random? Am I leaving my trade just because I chose to keep it all the way to this price? Why am I not keeping my trade? What did I see that changed my mind? Again, your emotions versus the logic. The logic told me this. If you look at this, I said we move the stop losses higher and then higher on the Nasdaq according to what I see reasonable. Move your stop loss, take out whatever. So at one point I said Nasdaq resistance at 12870. I know likey, and we joke about this phrase. I know likey. 12870. This is it. This is the actual resistance that I saw. Tools, arrow. So this is the resistance. 128. This is it. I saw it actually accumulating here at that time. And since I exited, it retraced almost 50% from the entry. It might go higher now or maybe come back down lower. I don't care at this time. 450 ticks. And I also emphasized on it on the elite members call. You see, this is not the channel for NASDAQ. This is the channel for members. At the same time, I said I gave my members a view on the NASDAQ. I said no likey. And they understand it. Look what I have against me. I have a tremendous amount of contracts against me. And I said I no likey. So I was expecting a retracement to come back down. So I exited. All right? Again, that was at the time. That was at 1146. And if you look at the market, see 1147, the top. You see this? At the bottom. So that's, folks, what sums up the whole strategy. Anticipate, confirm, execute. Keep your emotions out. Learn what the market makers are doing. If you don't know that, folks, you are gambling. I'm sorry. So learn that. Stay in touch. And if you contact us, tell us about your needs. Tell us about your trading experience. We can help you out. This is a full membership that has trade calls, education, support, members with you, indicators. So it's a full membership. So we could grow together. I've been doing this for many years. This is all I do. Okay. You are trading options, binaries, CFDs, forex, futures. Of course, we mostly do futures. You should join this offer, and this offer is not costing you anything. It's just a free membership. But you have to tell us about your needs. You cannot just come in and join the free channel and get the full. You have to tell us something. You have to tell us what you want so we can work with you. Okay. Again, no obligation. If you don't like it, by all means. You might not like the price. You might not like the fact that we're trading. I'm calling swing trades, and sometimes students do scalping, but you're not a scalper, and yet you're not a swing trader. You're somewhere in the middle. Maybe you don't like my attitude. Maybe you don't like. Regardless, folks, there's no obligation. You see it, and you get what you see if you like what you see. And finally, if you require information or if you need to chat with us, send us an email or just basically send an email. Either fill this form or send an email to sales at thetraderinstitute.com, or call us, talk to us. If you look at this page as about, it also has some information about us. And all the best. Enjoy your weekend. And bye for now. This was Simon Jousef from thetraderinstitute.com.